Welcome back. Welcome back. You're listening to Whissel Wednesdays here on KCBQ 1170. The Answer. My name is Kyle Whissel with Whissel Realty. Also joined in studio today, we've got AJ Powers with the Powers Premier Team, Jason Hall, Team Home Loans. Again, before the break, we were talking with Philippe Heller with the Real Estate Inspection Company. They do some awesome stuff when it comes to doing pre-listing inspections. Make sure you can find out any issues before you put your home on the market instead of finding out once you're in escrow and having a deal fall apart. We've also got a really cool 3D virtual tour. If you want to see an example of one of those virtual tours, shoot us a text, 619-663-SELL, 619-663-7355. We'll shoot you a link so you can see what one of those looks like. So guys, what I want to get into, we're in our last segment here. We got to power through this. I want to give our listeners some really good content. We've talked about when somebody's listing a home, why they don't want to hire the discount broker. What I want to talk about now is if somebody's looking to get into the investment property world in real estate, what do they need to know? Both if they're looking to buy a rental property or if they're looking to flip property. I know, AJ, you're working on a flip right now up in Fallbrook. So tell us a little bit about that.
Yeah, I think really you want to find someone as far as an agent that has done it before, because they're going to be able to point out a lot of things that you may not see as a consumer that need to be fixed, that are either going to add or detract value and are going to end up costing you a lot of money in the long run. So finding someone that knows the ins and outs of what it costs to buy this property now, what it's going to be worth when it's done, and what it's going to take to get it to that point. And, you know, the very first flip I did, I went in and did everything myself. It seemed like a great idea at first, but it took probably 3 months longer than it should have. My time is valuable. You forget that you're not a contractor until you start going out there and doing some of the stuff. So having someone that has a reputable contractor that can do everything, it might cost you a little bit more, but in the long run, you're going to make a lot more because that property is going to be in the market in half as much time, and it's going to be done right.
Definitely. We've had some of our hard money lenders, which is the most common type of financing on these flip properties. And most of the time, you know, you're paying anywhere from 8 to, 18% interest to these hard money lenders. So you're talking about hundreds of dollars per day in interest that you're paying these guys. So time is money when it comes to flipping property.
Yeah, especially in a market where, who knows what's going to happen. In 6 months, the market could be completely different, and you could have lost 5 or 10% value because it took you so long to get ready to put it on the market.
Yeah, timing's definitely everything. So Jason, you guys didn't necessarily flip a house, but you guys have gone through the process of doing a heavy remodel, and you guys kind of contracted everything out yourself. So share with the listeners how that experience went.
It's a lot of work. My wife really wanted to kind of man that and handle that, and I was like, okay, I'm going to work, and I'm just going to work hard and do my stuff. But when you have a couple, husband and wife, trying to do that and things don't go perfect, it makes a little strain on the relationship, right? We've been married 25 years. Thank God we got through that a few years ago when we did that. But it is a big project to try to tackle something on your own. It truly is, AJ, as you mentioned. You want to have a professional handle that, pay somebody to oversee it, where you guys just kind of come in, say, this is what we want. Here's the changes. You can come in and make, looks and go, oops, we said we're going to do this. This doesn't look like it's happening. Boom, okay, let's correct it now, get it done, versus causing other issues. So, and as you mentioned with hard money, a lot of reasons people have to go hard money on these is these properties are not financeable, right? So they're in bad condition. They're not going to go FHA. They're not going to go conventional. They're going to have to go cash or private money, which is kind of the hard money. And that's where those lenders step up, charge that 8 to 10% rate, charge a few points, get it done. And you're putting typically 20 to 30% down, even though they'll do some a little bit less.
At least. Yeah. I mean, with hard money, it's all a relationship thing too. So that your first deal, you're probably putting, anywhere between 30 and 50% down. And maybe after you do 5 or 10 deals, then they might work with you and you build that relationship with them. Right. So they're a little bit unconventional with their lending practices because the relationship factors into things where traditional lending, it's nuts and bolts.
We're looking at credit score, your debt to income ratio, the cash flow on that investment property, and how the condition of that property is. So on a regular investment, if it's something you're going to keep long term, you're talking 20 to 30% down doing a regular conventional loan. But that's something you guys would keep in your portfolio, 2 to 20 years. And that's a whole different property than a flip property.
I love it. So let's shift gears a little bit. Again, you're listening to Whissel Wednesdays here on KCBQ 1170. AJ with Powers Premier. We talked about the flip market. What's going on with the rental market? So this is people who are looking to buy properties, hold on to them, rent them out. So what's happening in that market?
Well, as anyone that's trying to rent in San Diego in the past couple of years will attest to, rents have gotten extremely high. I mean, cost for a one-bedroom apartment anywhere nice is $1,500-$1,600 plus. I mean, you could get in the 2,000 range easily. So it's still attractive with these rates being so good. Investors can go out and put 20% down and buy a property that's either going to break even or cash flow a few $100 a month, no problem. And basically that tenant's going to pay off your loan in 30 years and you're going to sit on a chunk of equity, or you're going to do what some of my other clients do, and that's turn into 1031 exchange and go buy something else that makes you more money. So depending.
What
like
is
the
a
game
1030?
Monopoly, right? You kind of start with a little house, then you move up to 2 units, a 4 unit, you get a hotel.
Right. Yeah.
So
So
what's a 1031 exchange?
1031 exchange is when you have an investment property that's not a second home or vacation. You have to show that it's a rental, but you can basically take the equity from that home and do an exchange for another home of equal or greater debt. And that way you don't have to pay any kind of taxes on that exchange. So it's a way for investors to take money out of one home and put it into another without paying any taxes.
Well, if Trump gets elected, maybe those tax rates won't be so bad.
I'll be hitting up all my investors if those tax rates go down.
Yeah.
At some point, they'll want to sell them.
Yeah, it'll be a time. Then that might make sense. You're absolutely right. It might be an opportunity to sell.
Yeah.
Since the demand is high, because we know rents are going through the roof. AJ said it. I mean, it's crazy.
The projections, rents are going up about twice as fast as they have historically. And a lot of the projections see that continuing, if not amplifying, to where they're even going up 3 or 4 times what they normally are. I mean, I've seen downtown right now, if you want to rent a 1-bedroom, good luck touching anything for under $2,000 a month. For a 1-bedroom.
1 bedroom.
I mean, we're getting like New York City and, downtown.
So speaking
San
of long-term
Diego.
rentals, how many long-term rentals, Kyle, do you have right now?
We're up to about 20 doors right now. So I've got a mix of condos, I've got some houses, I've got some 2 to 4 unit properties. So I've got a mixed portfolio of a couple different property types. But I mean, our rents, we raised every rent 10% this year on every single property that I own.
So it's a good idea to buy investment property in San Diego.
It is, because now my return on investment is higher, 10% higher than it was. Actually, when you factor in the leverage of buying investment property, the fact you only have to put 25% down and you get 10% raise in rents, the effect of that is exponential when it comes to the return on investment. And the other cool part is the tax benefits of owning rental property. When you own investment property that's rented out, you can depreciate that over 27 and a half years if it's a residential type property. So you take, let's say it's a $275,000 house, divide that by 27 and a half, and you get to write off that much every year. So that's $10,000 every single year for the next 27 and a half years that you're going to get to write off on your taxes, which we talked about. The tax rate for higher income people is almost 40% right now.
All right, that's a lot you just said, Kyle. So here's what we need to listen. We need to text Kyle at 619-663-7355 to find out more information on how you can take advantage of being a landlord and actually owning rental property with all the deductions that come along with it.
Yeah, so you get cash flow, you get tax write-offs. I mean, it's a beautiful thing. And the cool thing when you want to sell, like AJ mentioned, you can 1031 exchange, and all that money that you would have had to pay the government, you can just, as we call it, kicking the can down the road, just buy a bigger property and avoid having to pay that tax for the time being.
Yeah, I mean, there's people that start with a little house that kept buying, now own multi-million-dollar units, and they've never paid any income tax on the actual gain on all those properties because they've never sold a final property.
So we're running out of time, AJ. Any last words for our listeners?
If you are considering buying or selling, do it now. Don't wait for the market to get better on either end. It's really good for both parties. And, there's always a way to make things work, whether it be you don't have a lot of money or you don't have great credit. You can do it. We can figure out a way.
Love it. So if you want to connect with AJ, with Powers Premier, Jason with Team Home Loans, or myself at Whissel Realty, give us a call, shoot us a text, 619-663-7355, 619-663-7355. Thanks so much for listening to Whissel Wednesdays. We'll see you next Wednesday, 7 p.m.
I'm gonna show you how to do it, and we start real slow. You just put your lips together